since the Circle IPO, there's definitely a flip switched in the minds of managers that have never thought to touch crypto. That's part of the reason why we're seeing a capital rotation from Bitcoin into ETH. ETH is that, we could debate whether it is the platform to own, but that is where the majority of stablecoins are housed. And over time, there is set to be, in my view, some value accrual from being the platform on which these things are traded.
Today's episode is brought to you by Meanwhile, the world's first Bitcoin-denominated life insurance company. Protect your family's legacy with the ultimate store of value and fight back against inflation eating your savings. Life insurance, now in Bitcoin. Welcome in, everybody, to another episode of Coinage. I'm your host, Zach Guzman, coming to you live from our Brooklyn studios here in New York City as we are watching where things go, as we are just about a week away from seeing what the White House's take is, the president's working group on everything crypto, what they're going to say about how America can move forward in this space and what might be the smartest moves forward. And to discuss all of that and the smartest moves forward for you in crypto, very happy to have back on the show with us today, Fundstrat's head of digital asset strategy, Sean Farrell, back on Coinage. Sean, it's good to see you, man.
Zach, great to be here. Thanks for having me.
Yeah, I think, first of all, we need to start by giving you your props. I've been doing this on X, but we got to do it on the show officially because you have been nailing your calls. Not only did you talk about SBET back when it was at $9, kind of at the beginning of this digital asset treasury trend, obviously above $9 now. You also called kind of taking money off the table on that one. And also, if we back up even before that, looking at the ETH BTC chart over here, a couple months ago, you mentioned that it was time for ETH to have its moment in the sun, and that does appear to be playing out. So, Sean, first off, props to you. I guess second question, first one wasn't a question, but second thing here would be where you think we go now that we're past GENIUS Act passing, now that we're after the Clarity Act passed the House, and just like a few days away from the president's working group. How do you kind of assess where we are in the cycle now?
Yeah, well, first off, thank you. Appreciate that. So I guess stepping back, our current view, we approach the crypto market from, a macro first perspective. That's kind of our competitive advantage, right? I have one leg in macro and traditional financial markets and the other leg in crypto. And, we view the current backdrop as one of a Goldilocks backdrop. Inflation, despite goods, inflation starting to pick up, you have services offsetting that. And so on net, we're still in this disinflationary path, which, isn't going to turn the Fed dovish, but, I think wait and see from the Fed is just as good for risk assets. And growth, despite prior concerns around, when tariffs and tariff fears were at a fever pitch in Q1, growth is still quite sound. We see this in jobs numbers, durable goods orders, ISM improvements. We're starting to see that being reflected in yields. We're seeing the long end starting to pick up. And I think the market is starting to come around to us moving into we'll call it a more of a growth regime. The economy is pretty hot. And, that's an environment where, crypto is set to thrive. We also just passed, I think you had mentioned, we passed the big, beautiful bill. Maybe you didn't mention that. But that's also largely viewed as stimulative to the economy. It may not, but it is seen by the market to perpetuate deficits. Meanwhile, liquidity trends remain positive. The dollar index moving lower. We've yet to see the Treasury embark on refilling the TGA, which I think will be something to manage risk around in Q3, but we're not there yet. And to your point, back in May and into June, we saw capital start to move out further on the risk curve. And, I think we've talked about this on here before, but, that small cap, large cap ratio generally follows that ETH BTC ratio pretty closely, at least over the past few years. And, I think that is emblematic of the current environment we're in, and why ETH outperformance could continue.
Well, we'd be remiss if we didn't talk about, I guess, the other big piece of ETH outperformance being driven by DATs, as you've coined them, and the idea of not just BitMine, SharpLink, a few others, Bit Digital. I mean, if you kind of look at the tracker that I got pulled up here, it's been interesting to see how many other companies, publicly traded or otherwise, including, by the way, if you scroll all the way down, Coinage right there, baby. We're on the list.
Hey, nice.
We got a more humble 101 ETH there, but as a co-op, we do our best. Sean, when it comes to that trend, I think a lot of people have overreacted potentially to the downside. Certainly, they've done the same for MicroStrategy and what he's doing, Michael Saylor's doing with Bitcoin. It sounds like you're in the camp that, look, even though there is a bit of a buyer boost here from these DATs, the downside is perhaps being, overstated when things potentially could turn. But kind of how do you see how much of this is tied to everything you just described in the macro side and kind of, I think, optimism around ETH and the stablecoin boost versus just additional buys coming from these treasury companies?
Yeah, look, I guess anecdotally, since the Circle IPO, there was definitely a flip switched in the minds of managers that have never thought to touch crypto. I think it's amazing. In crypto native circles, we're pretty well versed on stablecoins, and we all know that stablecoins have this product market fit, and they are one of the few product market fits in crypto, and we've talked about this ad nauseum. But we are in this little bubble, and I think the Circle IPO did numbers as it pertains to proselytizing for stablecoins and for tokenization more broadly. And I have had dozens of conversations with folks that are coming to crypto because of that trend and are very interested, and there's this insatiable appetite for exposure to this stablecoin slash tokenization mega trend. And I think that's part of the reason why we're seeing a capital rotation from Bitcoin into ETH. ETH is that we could debate whether it is the platform to own, but that is where the majority of stable coins are housed. And over time, there is set to be, in my view, some value accrual from being the platform on which these things are traded.
Yeah, no, and certainly we had Tom Lee on, leading the charge of BitMine. Seems to be the founding thesis of why he's also betting on ETH. If you haven't checked out that interview, his $10,000 price call, which I believe is kind of borrowed from a lot of the things you and I have discussed, Sean, around kind of where ETH goes from here. But you did mention the president, and I do want to kind of play a little bit of what we heard at the signing ceremony for the GENIUS Act, and then get your take on kind of what we might expect once the president's working group publishes that report. It sounds like it's already been... They met the deadline, but no one knows what's in it yet. And so we'll find out about that in a few days here. But just want to play what we heard from President Trump and ask you about that on the other side. Take a listen.
So the golden age of America is upon us. And with today's signing, the future of crypto and the crypto industry, the US dollar working together, because they really are hand in hand, is going to be stronger and bigger and better than ever before.
All right, so we're talking about things getting stronger and bigger and better than ever before. And of course, a big part of that is how the president's working group wants to potentially lean into this space moving forward. And they're set to kind of deliver their recommendations on that. I guess, what are you expecting to hear? What is the market expecting to hear? Where's baseline at? And what should people brace for with this one?
Yeah, so I mean, I think as it pertains to market impacts, obviously the big thing that people are waiting to hear is any color around the potential creation of a real strategic reserve, right? Not just holding on to the Bitcoin that has been forfeited to the government in legal proceedings, but actually, finding ways to acquire Bitcoin on a budget neutral basis. And like you mentioned, the report has not been released to the public, but should be made available, according to, I think I saw one report, might have been Eleanor Terrett put out a report saying that it will be released by end of month.
I can
So that's
confirm.
about
I'm
a week
looking at
away.
July 30th is what it sounds like. We call it the White
Okay.
House over here at Coinage as well.
There you go. So, you know, perhaps we do, you know, see some color around an SBR in that report, which obviously would be extremely bullish for Bitcoin and by extension, you know, the whole crypto universe. But you know, we're not privy to anything written in that report. And obviously, if we were, we would certainly share with our clients.
Likewise, we would certainly share it as well here if we knew anything. But I do know that July 30th looks to be the day. And I guess, you know, riding that wave too, Sean, is interesting. You and I were chatting before we jumped on here because there was a report around Goldman Sachs as well I want to bring up and what they're trying to do with blockchains and kind of other banks, because it's a big number in terms of the size of money market funds. And you got a lot of people maybe coming from the TradFi world who always looked at stablecoins kind of more like a money market fund, minus the yield, because the GENIUS Act, of course, also doesn't let these issuers distribute yield back to holders. And so it's kind of interesting to think about how big banks might try and play this with their own private blockchains and whether or not that kind of dents a lot of the, I guess, fuel on the fire right now, as we just discussed. The idea of Tom and others looking at stablecoins being the juice for Ethereum. If maybe some of that money doesn't flow on Ethereum, does that dent the idea? If it's just Goldman Sachs and co. trying to do their own private stablecoin on the side over here, what that might mean, and if you think that take might be overblown as well.
Yeah, I think, well, first off, that you're absolutely right. I think the money market fund analogy is very good for stablecoins. That is a good way to think about it. Money market funds minus the yield. But, you know, as it pertains to banks, maybe stifling tailwinds for stablecoins and, you know, ETH more broadly, you know, I'm a seller of that idea. I think that, you know, well, first off, private and permission blockchains, sure, if they are an intrabank network, that's going to perhaps improve operational efficiency, maybe cut some OpEx, marginally improve the customer experience. But, you know, you kind of lose out on most of the benefits of blockchains and stablecoins or tokenized assets more broadly. You know, if you're on that permission network, you don't benefit from things like, you know, composability, interoperability, global accessibility, right? You still have that instant settlement, but it's, you know, who are you instantly settling with? Just, you know, counterparties within your own network. And so the way I view it is I think looking at banks to be the leaders here is probably incorrect. I think you probably want to pay more attention to the fintechs who are leading the charge or are going to lead the charge. You know, I'm thinking of the obvious ones like Robinhood and Coinbase, who could actually leverage stablecoins to, you know, siphon, you know, say Gen Z bank users, right, who can just come to Coinbase or Robinhood or Kraken, what have you, and do all of their financial asset management there. It's also important to note that despite the fact that stablecoins can't technically pay yield, I mean, we see this with Coinbase. There are ways for, you know, these stablecoin issuers to pass on yield. And so, you know, whether you call it a marketing, you know, a rewards program or something like that, there are ways. So,
no, it's
yeah,
a good point. There's definitely ways.
And, yeah.
There's also the same way with Agora. It's interesting to see kind of Agora out of the box doing stablecoins as a service. They're also kind of working on similar things, having yield be shared. Candidly, Coinage also exploring a lot of this ourselves as we dive into the world of running our own validators that people stake with us here at Coinage too. So it's a very interesting world now. And I guess before we get into more of the on-chain dynamics here, with your take on where Solana goes, another one of those that you've seen kind of outperform against Bitcoin and Base, some very interesting things happening there. I do want to squeeze in one more kind of recommendation that you recently talked about. It caught a lot of attention because you took money off the table in your kind of recommendations on SBET and moved it over to Galaxy. And if we talk about kind of crypto equities that get slept on, it's kind of funny to think about Galaxy just because they've been trading up in Canada for so long, kind of under the radar, came back over here, now trade in the US. And as a company, I don't know, Sean. I mean, explain to me kind of what might be happening with people sleeping on Galaxy just because they got Novo, one of the biggest faces in the space, and they've got, essentially they've got their hands in basically every crypto project, and also now leaning into AI. What's your take on Galaxy and maybe why it could be potentially the place to catch up on a lot of this enthusiasm versus a Coinbase or Robinhood, like you just mentioned?
Yeah, I think, well, there are a couple things going on. Well, I guess the main thing is that folks are, I think, really sleeping on Galaxy's data center business. So Galaxy's data center business is called Helios. It has, I think, 800 megawatts of approved power, 600 megawatt contract signed with CoreWeave. That's going to provide almost $1 billion a year in high margin annual revenue. And, I think that is just something that the market is currently coming around to. It's very interesting over the past month or so. We've been bullish on the AI HPC miners, and it's been odd seeing Galaxy lag those names. But whatever it was, over the past few weeks, we've started to see the market reprice that business, and so you have earnings coming up on August 5th, and they'll probably speak to that. And in addition to that data center business, you also have, Galaxy has a very impressive balance sheet. Obviously there's been a lot of trading and volatility this quarter, so that should also be a tailwind for them. I also think that they've been in a lot of these, digital asset treasury company deals, and so I don't know how many or to what degree, but certainly that should also be rather accretive to their balance sheet, assuming that they are still holding on to those positions.
That's a very good point. I think there's a lot of elements as you dig into Galaxy's business that even I myself over the years have just kind of thought maybe that's a better way to play this longer term than kind of having to be in the weeds every day if you just kind of trust someone else who also sees everything to be in the weeds for you. But I don't know. It's a very interesting company, and I think one that might get more attention as they kind of move things here. We didn't talk too much about the uplisting, but I know that they've been working on that for a long time, and now it's happened. When it comes to more things on chain, though, there's two things that I saw you talking about recently that I think is very interesting to dig into. One would be how you judge Solana here, because so much of the narrative had shifted, and I think Bitmine and SharpLink also playing their role in a lot of the narrative coming back to ETH. But the idea of Solana kind of being left for dead may have been overblown just because of how much they've also had the lead when it comes to TradFi, building on Solana, tokenized stocks, etc. We saw Robinhood move forward with Aerodrome, though, so it did kind of take a little wind out of the sails. But what do you make of Solana being there as kind of still has the ETF potentially to come through this year, still has that wave to ride at 190-ish right here? I mean, what are your thoughts on relative value?
Yeah, look, I think our thesis over the past, or market views over the past month or so, couple of months, on a relative basis, we viewed Solana as at risk of underperforming through the pump.fund launch. I think that a lot of Solana native capital was earmarked and set aside for that token sale, and now that token sale has passed, I think you're seeing a lot of capital freed up and rotating back into the native asset of Solana, which is Sol. So I think that is one thing that is helping it trade better here, absent the drawdown that we saw yesterday, of course. In addition to that, I think that you're seeing a lot of capital rotation looking for a broad repricing for Solana. If you have one of the most bullish things for Solana, I think, is ETH re-rating higher, right? Because intuitively, all of these L1s reprice off of ETH. And so, if ETH continues to show outperformance, I think, you should expect Sol to show some beta to that over longer time horizons and, provide a pretty compelling risk reward. And like you said, we are expecting Solana ETFs at some time this year. Hopefully, I do think we're probably going to get staking with them, but TBD on that timeline.
Yeah, it's unclear what, I mean, we've talked with Hester Peirce in the Crypto Task Force for quite some time, and that has taken a lot longer than even I think she led us to believe, in terms of hoping to get ETH staking across the board as one of the first things after Chair Atkins came in. It's all kind of taken a little bit longer than I think even she wanted it to, based on her last convo. But I guess just to put a finer point on it before we move on, Sean, I mean, price target on 185 right now. I think it peaked at like mid 250s, 260s ish. I don't know where you see that going potentially this year.
Yeah, I mean, look, I think our loose price target at the beginning of the year was around 450, and I think that is still in play, especially if you assume a return to cycle highs for Sol BTC against a Bitcoin price of 150 to 175K. That could definitely get us there. Obviously there's going to be a lot of resistance around that previous all-time high level, but if we are to break that, it's probably not going to stop at 300. It's going to do quite well beyond that, and of course you also have the like I just mentioned, the tailwind of ETH starting to participate and potential re-rating from that also could help us get up that level. And
I think it is interesting.
Also, it's hard to ignore the memetics around the potential price target of 420 for Solana, which I think you and I have both seen that price target being thrown around on crypto Twitter.
The history of it all, man, goes back to a lot of what I think even SBF had originally mentioned back when he was saying that everyone should just give him the Solana at $2 or $3. I think it was, going all the way back then. And yeah, I don't know. We'll see what happens with 420. But I think on the actual competition element of that, it has been interesting to see Base kind of catch some excitement here as well. Not to overlook what Jesse and co are doing with Base. And you actually commented, I mean, they're a little bit unique in the sense that they don't have a token, right? So like there isn't like a soul to bet on with all the activity going on in that ecosystem. They've been betting huge on getting users, leveraging Coinbase's distribution. And now you're looking at one of the DeFi projects over there. I want to spotlight that because I do think it makes a lot of sense. If there is no token, that could potentially suck liquidity or suck anything out of the excitement around the Base ecosystem. This could be the benefactor. What do you have your eyes on when it comes to Base?
Yeah, so like you mentioned, there's no native token to Base, but Coinbase is doing a lot of interesting things. Obviously, Base was built by Coinbase, and they put a lot of developer resources behind it. They just launched the Base app, and it's a leading L2 on Ethereum. And if folks want to get exposure to the Base ecosystem, the best way to play that is probably Aerodrome. That's the leading DEX on Base, also invested in by Coinbase. So there's some financial incentive there for Aerodrome success. But Aerodrome accounts for anywhere between 60 to 80% of spot volumes at any given time. Has a very compelling token design, in my view. I think it's taken pieces of prior DEX designs and molded that into a model that is very focused on accruing all of the value on a DEX to the token, which in turn satisfies all of the major stakeholders on a DEX, being the trader, the LP, and the token holder. They're printing revenue. I think this is from last week, but at the time their 90-day annualized revenue was around 200 million, which approximates a 7 to 8x multiple, which compares very favorably to other DeFi protocols and other DEXs. And yeah, so I think if you're looking for ETH beta and or exposure to Base, the leading L2, that's probably a good way to do it, and offers a pretty compelling risk reward here.
Yeah, it's an interesting way. I mean, I don't know. The Zora token has also seen a boost as kind of Coinbase leans into the idea of on-chain content, but never know how long that kind of trend will last. And I think I think this take is a very different one. And the other thing, too, I guess, in terms of while we're on Coinbase, I'd be remiss if I didn't mention that they also just launched perps in the US. I know that this has been a long battle for them. I don't know if these points are related, but I do want to kind of bring up one of the tweets that you had, kind of just looking at CME futures and kind of where all of that excitement is coming from. I'll bring it up in a second. But you noted in terms of Solana, you saw a huge explosion with CME futures and volumes around that for Solana. I do wonder what Coinbase adding perps could potentially do when it comes to volatility, price expectations. I mean, these are things that, I don't know, when you start to throw leverage in front of kind of average people, we saw with Hyperliquid how quickly that grew. What are you expecting now that this is live?
Yeah, I don't know if it's Coinbase offering perps is going to immediately pull a new cohort of capital into the perpetual futures market. If anything, it's going to maybe reshore some of that activity. So I'm not overly concerned from from a perspective of this adding too much leverage to the market. Obviously, it's great to see. It's good that they have integrated USDC as collateral in their futures products. I think that's going to be big for USDC, obviously, and for potential uptake of their perps product, and should be pretty accretive to their business. But in terms of affecting market structure, I'm not sure that really changes the calculus all that much.
Yeah, no, I mean, I just think, I don't know, the chart that you shared was pretty wild, just looking at the CME volumes around Solana. And, obviously right after that, we saw the huge run up in Sol's price, which was pretty interesting to kind of pair some of those things. I mean, what's the general takeaway when you think about those things? And how much, because, I think the one thing that people kind of get confused here, and you've done a very good job of pointing this out in your research, is that like what happened in 2024 in December when we saw that huge run up and then eventual return to normalcy is not really what we're seeing this time around. And so I feel like that's an important distinction to make.
Yeah, I mean, it's in terms of, so when you talk about the end of last year, you mean just leverage outpacing spot flows?
Yeah.
Yeah, I mean, that's kind of the constant calculus that we're trying to make on the back end here, like in our research is leverage is obviously buyer beware, using leverage. Leverage is fine and can be bullish, or it can also be bearish. It depends on whether there's organic spot demand to match the increase in leverage and can perpetuate that flywheel of bullish success. And we saw that leverage get out over its skis back in December when folks were starting to take chips off the table ahead of year end. We're not necessarily seeing that right now, which is one of the reasons I think we could stage another leg up here, is that we have solid inflows into ETFs. DATs are obviously still pouring money into the spot market. Spot volumes are still pretty constructive. And the backdrop, like I mentioned, is still constructive as well from a macro perspective. And so despite some of the signs of things getting a little hot, right, you are seeing breadth relative to Bitcoin, on a Bitcoin denominated basis get extended, like you just showed. CME futures speculation is getting pretty extended. I think that Sol CME basis is up to 30% today. And we do have some, just to put it bluntly, garbage rallying. Spot flows are still solid, and it's tough to get too concerned. Obviously, you could have your intraday or intra-week leverage wipes, but it's much different from late December due to the difference in spot flows, in my view.
Yeah. Well, just to pair everything and kind of wrap up here and put it all together, I know that we're entering a somewhat historically soft period, shall we say, for crypto over the summer months. I'm just bringing up the chart here and kind of looking at monthly returns, and you'll see a lot of red in August and September. And as you kind of look at, I think it's still $175,000 price target for Bitcoin as we wrap up 25. You made that prediction, if I remember correctly, back in January here on Coinage. And if you kind of piece all that together, is kind of the takeaway here, like, hey, be careful if maybe, dare I say, some of our members listening maybe levered themselves in the summer months and then, you know, continue to see a rally here into year end. I mean, is that kind of the advice, the idea?
So our view in the short term is that, you know, that negative seasonality that normally starts, I guess seasonality. So it starts in mid-August and runs through September. That is on our radar, but that's 3 weeks away, and a lot can happen in 3 weeks. So it's tough to, you know, take too much risk off in anticipation of that seasonality just yet. Like I mentioned, liquidity trends are still positive, but you know, in Q3 we might get some pressure on, you know, bank reserves from the Treasury having to refill its proverbial bank account, its TGA. So that's something that will probably align with that seasonality. And like I mentioned, yields are starting to rise due to the market appreciating growth, the growth of the U.S. economy, and that could eventually get to a point where in August and September where that causes risk assets to seize. So I do think, you know, a few weeks out from now, we probably are looking to keep our head on a swivel, we'll say, but you know, we're not there yet. And then, you know, beyond that period of negative seasonality, I think a lot of the macro variables that we had just discussed probably revert back to that Goldilocks environment that we've been in over the past couple of months, and you know, that should, in our view, lead to another period of conduciveness for crypto to succeed in Q4.
Yeah, well, I think a lot of our audience would certainly be clapping for that to eventually play out. And as we open, Sean, we will close with another one of your calls that hit, and I think deservedly giving you that victory lap, because there was another one that you called out. It's very rare, by the way. This is why we love having you on the show, is someone who can understand macro but also wants to get in the trenches too, because you were talking about Bonk and the idea of that Memecoin platform and their buy and burn around the pump drop and how mispriced that was. I'm just looking at the Bonk chart now, and I think it was around this time that you made the call. It's up like 150% in the last month, and you made that call, I want to say, a few weeks ago. And I don't know if there's still room in that one or not, but well done, my friend.
Thank you, Zach. Yeah, I've had the privilege of meeting some of the Bonk team, and yeah, sometimes it's a bit of a complicated conversation with a cohort of our client base, but look, at the end of the day, we're trying to find opportunities to outperform Bitcoin, and you know, we viewed this as one of them. I mean, they've just been eating pump.fund's market share and are printing money hand over fist, and obviously there's a strong mimetic component to Bonk, and that should be considered. And you know, we did pair in our core strategy, we did take some gains in Bonk last week, but you know, that may have been premature, frankly, looking at this chart.
Yeah, well, I mean, it's been a very interesting thing to watch, and obviously, as all of this shapes up, there are still a lot of experimentation going on when it comes to kind of how to capture the revenue here, how to experiment with meme coins and the like. We just had Pudgy Penguin CEO Luca Netz on talking about that as well. I saw Tom Lee change his PFP. Pudgy's always around the ETH ecosystem. It's very interesting. There's a lot of experimentation going on. And as I said, as we opened, no one doing a better job, I think, of kind of exploring all of it than you and the research you put out at Fundstrat. So can't thank you enough for coming on here, Sean. Appreciate your time again, as always. Thank you, man.
Yeah, Zach, always a pleasure. Thank you.
Right on. Well, we'll have you back soon. As a reminder, by the way, for everyone watching this right now, too, it would be remiss if I didn't also throw out a mention of what we are also doing here at Coinage as we try and experiment with all this, too. the idea of a play button. Simply by watching here, you've also burned play button. So thank you to everyone in the Coinage community who has also participated in this with us as we take a look at the play button chart as well there, Texas. Be remiss if I didn't give a shout out to everybody who's participated in just simply watching this. We burn play button every month. So our thanks to our viewers out there as well. It's going to do it for Sean, for myself, for everybody here at Coinage. You can check out our latest videos over on our YouTube channel or head to coinage.media to co-own this outlet with us. Appreciate you taking the time to chat with us today, or maybe just listen in. We'll see you again soon. As always, check out the biggest headlines over at coinage.media. I'm Zach Guzman, signing off from New York City. We'll see you again soon.